Welcome to the deep dive.
So picture this. You've got this massive, urgent global need for energy, right? Especially with AI data centers just sucking up power.
Yeah, it's incredible demand.
And that's crashing right into the complex and really long-term promise of advanced nuclear tech.
A classic tension, need versus development time.
Exactly. And right in the middle of that, there's this company, Oklo Inc., ticker OKLO. They've got some pretty unique technology aimed at both the energy problem and the nuclear waste issue.
And their stock. It's been, let's just say, lively in May 2025. Wild swings.
That volatility is a huge sign, isn't it?
Yeah.
Tells you the market sees massive potential, but also like huge question marks.
Absolutely. It's grappling with the unknowns.
Which is why we're here. We're going deep into this stack of sources you've shared on Oklo Inc. We're talking compact fast reactors, nuclear fuel recycling, the works.
Our job today is to sift through it all, pull out the really important bits.
Right, help you understand what's actually significant about Oklo, the potential, the challenges, based only on these materials we have in front of us. Think of us as guides trying to make sense of this complex picture. What's the real story here?
Exactly, because, why focus on a nuclear startup that isn't even making money from its main business yet?
It's a fair question.
Well, because understanding companies trying to tackle these enormous global challenges, clean energy, waste, especially when they're linked to huge trends like AI, it's just essential information today. There are layers here.
Lots to unpack.
Definitely. Before we really jump in, just a quick reminder, if you're finding these deep dives useful, please do like and subscribe to the Stock Analytics AI YouTube channel.
It really helps us out.
And here's something for you. For just Euro 4.99 a month, members get priority access. Give us a ticker symbol, and we'll put our deep dive process to work for you. Great for getting up to speed before a meeting or just understanding a company better.
And definitely stick around till the end. We've got a question about Oklo's path forward that connects back to that big energy challenge. Might make you think differently about things.
Okay, let's really get into it. The fundamentals. Oklo Inc. What's their core thing? And crucially, how do they plan to actually, make money? Because that's the big question for a company with this kind of valuation, but no operating reactors yet.
Right, that's the key. Oklo's focus is on advanced nuclear energy. They're developing these compact, fast neutron reactors called Aurora powerhouses.
Compact. How small are we talking?
Initially, they're designed for about 15 to 50 megawatts electric. But the idea is they're scalable, potentially up to 100 megawatts, relatively small compared to traditional plants.
And they're not just selling the reactors like pieces of equipment.
No, and this is really important to their strategy. It's a build, own, operate model. They plan to build the powerhouses, own them, and operate them themselves.
Okay.
So the revenue comes from selling the electricity generated directly to customers. They'll use long-term contracts, power purchase agreements, or PPAs.
Ah, okay. So they take on the upfront risk, but aim for steady income later.
Exactly. Decades of potential revenue streams if it works out.
Who are they selling this power to? Who needs the specific kind of setup?
Well, the sources point to a few key markets, and one is getting a ton of attention right now. Data centers, especially the ones powering all this energy-hungry AI stuff.
Makes sense.
Right. They also target remote communities, industrial users, even military bases. The Aurora design is meant to be flexible, good for off-grid use, and it can run for, get this, 10 years without needing refueling.
10 years. Wow, that's a big deal for critical sites like data centers.
It really is. Reliability is key there.
So selling power via PPAs is plan A. But they have other angles too, right? Something about recycling fuel.
Yes, and this is a major differentiator for them, potentially. They're developing the tech to take used nuclear fuel, what we usually call waste, and basically recycle it into new fuel for their own reactors.
Okay, that sounds ambitious.
It is. But if they pull it off, it could massively lower their fuel costs long term, and maybe even open up a whole other business line, offering recycling services or helping with the bigger nuclear waste problem.
And there was an acquisition too, something else they might sell?
That's right. Back in February 2025, they bought a company called Atomic Alchemy. Cost about $25 million in stock.
What's the idea there?
The goal is to use their reactor tech to produce valuable radioisotopes. These are used in things like medical treatments, industrial processes, scientific research. So yeah, PPAs are the main game, but recycling and isotopes are interesting future possibilities.
Okay, that's the vision. Pretty compelling. What's the reality today, like May 2025? Financially, where are they?
And this is the crucial point you really need to grasp. Right now, Oklo is pre-revenue for its main power generation business. Completely.
So no money coming in from selling electricity yet.
Correct. They did report about $1.5 million in revenue for Q1 2025, but the sources strongly suggest that's from things like government grants or hitting certain project milestones, not from an operating power plant.
Right. And when might they actually start selling power? Is there a timeline?
Well, the projections mentioned in the sources, they vary a bit,
Hmm.
which is telling in itself.
Hey, certainty.
Exactly. Some sources point towards maybe early to mid-2026. Others suggest it could be later, like late 2027 or even early 2028. That spread highlights the risk and the long lead times involved here.
Got it. Big gap between the vision and today's reality. So
Yeah.
how big is Oklo right now? Market value, potential scale.
Okay, market cap. As of May 23rd, 2025, it was hovering around $6.8 billion. But, like we said at the start, that number has been jumping all over the place this month. Swings from roughly $25 up to over $52 a share.
Which for a pre-revenue company?
Tells you it's driven by hope and narrative, not current earnings. The market sees potential, huge potential, tied to the SMR trend in that recycling angle.
And their potential pipeline. You mentioned contracts.
Well, not firm contracts yet, but they report having a significant pipeline of potential projects, represented by those PPAs and also letters of intent, or LOIs. They say it totals around 14 gigawatts of potential capacity.
14 gigawatts is massive.
It is, but, and it's a big but, turning those LOIs into actual signed PPAs and then building the plants to fulfill them. That's the monumental challenge ahead. Still, it shows the demand they believe exists. As for size, they have about 100 to 120 employees right now.
Okay, huge potential pipeline, even if it's speculative. So the value proposition boils down to clean, reliable power, that unique waste-to-fuel tech, flexibility in deployment, and offering the whole package to customers. How does this fit into the bigger energy picture? Is this whole SMR market really taking off?
Oh, absolutely. It's a major trend. The sources show significant growth forecasts for the global small modular reactor market. Could be $13–14 billion by 2032, maybe even hitting $40 or $50 billion by 2035 in some scenarios.
What's driving that growth? Is it just climate change?
Climate change and decarbonization are huge drivers, definitely. Plus worries about energy security, countries wanting energy independence, governments becoming more supportive of nuclear, also replacing old coal plants.
Yep.
But there's a newer, massive factor now. Exactly. The AI energy imperative, as some call it. Training these huge AI models takes unbelievable amounts of electricity. Reliable, clean, baseload power.
And the big tech companies are noticing?
They're actively seeking it out. Amazon, Google, Microsoft, Meta. They're looking at nuclear deals to secure the power they need. This is a powerful demand pull that wasn't really there in the same way for previous nuclear pushes. Globally, you're seeing a nuclear comeback. Over 70 gigawatts are under construction worldwide.
Okay, so market need is real, growing, and AI is pouring fuel on the fire. But Oklo's not alone in this race. Who are they up against?
It is definitely a crowded field. You've got the established giants, think GE, Hitachi, Westinghouse. They're leveraging decades of nuclear experience to develop their own SMRs.
Okay, the incumbents.
Right. Then you have other startups focused on advanced reactors, like Nuscale, TerraPower, Bill Gates' company, and X-Energy. Each has its own approach, its own tech.
How does Oklo's tech compare specifically to those SMR competitors?
It's different. Nuscale uses a version of the traditional pressurized water reactor. GE Hitachi, a boiling water reactor. X-Energy is working on high-temperature gas-cooled reactors. Oklo's doing a liquid metal fast reactor specifically, sodium-cooled with metallic fuel.
And that's linked to the recycling part.
Precisely. That fast reactor design, based on older U.S. experimental reactors like the EBR-2, is what enables their fuel recycling concept. You also can't ignore international competition, especially state-backed efforts from China and Russia, which often face fewer hurdles.
Let's talk regulation. Nuclear licensing is notoriously tough. What's the vibe right now, and what's Oklo's track record here?
The regulatory scene, particularly in the U.S., seems to be shifting towards being more supportive. There's definitely favorable political talk. Executive orders came out in May 2025, aiming for fast reviews targeting an 18-month NRC approval timeline for advanced reactors.
18 months? That sounds fast for nuclear.
It would be a major acceleration. The NRC itself is trying to modernize its processes with things like the Advance Act. They're even proposing to cut licensing fees for advanced reactors by more than half by October 2025. Plus, policy is increasingly connecting nuclear to national security and, again, powering AI.
Okay, sounds generally positive on the policy front, but the sources mention Oklo hit a major wall with regulators before. What happened there?
This is probably the most critical piece of their story right now for you to understand.
Yes.
In 2022, the Nuclear Regulatory Commission, the NRC, denied Oklo's first application for a combined license, the COLA, for their Aurora design.
Denied. Why?
The official reason was insufficient information. They basically said the application wasn't complete enough, didn't provide enough detail on safety aspects. This wasn't just a request for more info, it was a flat-out denial of that specific application. A major setback.
Wow. So how are they dealing with that now?
Their current approach, as of late March 2025, is to re-engage differently. They're going through something called a pre-application readiness assessment, essentially working very closely with NRC staff before they submit a new revised COLA, which they plan to do later in 2025.
Try to avoid the same mistakes.
Exactly. It shows that even with supportive policy talk, getting through the detailed NRC process is incredibly tough, and Oklo stumbled badly the first time. Their ability to successfully navigate it this time is absolutely crucial.
So even with potential policy help, that regulatory hurdle is massive, especially given their history. What other big roadblocks are there in this SMR market?
Money, for one.
Yeah.
High capital costs.
Yeah.
Building even small nuclear plants is just incredibly expensive up front.
Right.
The complex and long regulatory process, as we just discussed, a huge barrier. Technological risk, proving these new designs actually work reliably and cost-effectively at scale. That only happens once you build and run them.
Supply chain issues.
Definitely. Developing the supply chain for specialized parts, and particularly the advanced fuels needed, like HALEU, high-assay, low-enriched uranium. Public perception can still be a factor, too. And, of course, intense competition.
What makes Oklo specifically hard to copy, then?
It's really that specific combination. Their liquid metal fast reactor tech, the ambitious fuel recycling plan, the experience they've gained, even the difficult experience navigating the U.S. regulatory system, plus that build-own-operate business model. It demands huge amounts of patient capital, very specialized expertise in physics and engineering, regulatory know-how, and the ability to convince customers to sign long-term power deals for tech that isn't commercially proven yet.
All right, that lays out the business, the tech, the market, the hurdles. Let's switch to the people. Who's actually running the show? Tell us about Oklo's management.
Okay, leadership. It's spearheaded by the co-founders Jacob DeWitt, who's the CEO and now also the chairman, and Caroline Cochran, the COO and a board member. Importantly, both have nuclear engineering degrees from MIT. They founded Oklo way back in 2013.
So deep technical roots.
Very much so. That's a clear strength.
Have they brought in other expertise as they've gotten bigger, preparing for commercialization?
Yes, definitely. They've made some key hires. R. Craig Bielmeier joined as CFO in August 2023. He brings finance experience from places like BP. And very notably, Alexandra Renner became Chief Product Officer in June 2024. Her background, former NRC engineer and project manager.
Directly addressing that regulatory challenge.
Seems like it, right? Smart move. Pat Schweiger is the CTO. The board also has a mix of finance, tech investment, and nuclear industry experience, including Daniel Poneman, who used to be Deputy Secretary of Energy.
Now, Sam Altman, he was a big name associated with Oklo. What's his situation?
Right, Sam Altman of OpenAI fame. He was Oklo's chairman. But he resigned from that role in April 2025.
Why the departure?
The stated reason was to avoid potential conflicts of interest, especially as Oklo looks to sell power to AI companies, potentially including ones Altman is involved with. His exit did cause a dip in the stock price, showing the market valued his association.
So DeWitt is chairman now?
Correct. Jacob DeWitt took over as chairman. Altman is still a major shareholder, it seems, but his stake was reported below 5% in early April 2025, so he reduced it.
How's management's track record? What have they actually achieved?
They've hit several important milestones. They got a site use permit from the Department of Energy, secured a fuel award from Idaho National Lab, completed that SPAC merger, which brought in critical funding, about $306 million. They built up that big 14 GW pipeline of LOIs and acquired Atomic Alchemy. But you absolutely have to weigh those against the biggest missed milestone, that NRC COLA denial in 2022. So the track record is mixed. The real test of execution is happening right now. Can they deliver on the revised regulatory plan and actually get to construction?
Speaking of that denial, how did they handle that crisis?
Their response seems to show, well, resilience, maybe adaptation. Instead of just giving up after the NRC said no, they regrouped. They started this pre-application readiness assessment in March 2025.
Working with the NRC before applying again?
Exactly. Signaling they're trying to address the NRC's concerns up front this time. Planning that revised KLA submission for later in 2025, it looks like a direct response to the failure.
How open are they with investors? Transparency?
They do the standard things, quarterly and annual reports, Investor calls, presentations, press releases. They're upfront about being pre-revenue and losing money, which you'd expect.
But has there been criticism?
Yes, some external commentary has been less positive. Notably, after their Q4 2024 results, Herb Greenberg apparently put them on a red flag focus list. The reasoning cited was increasing losses and a perceived lack of, quote, concrete financial progress. So while they report the numbers, some observers clearly want more tangible signs of commercial traction.
Any red flags around ethics or governance?
The sources don't mention any major scandals. Their mission clean energy waste solutions is generally seen positively. They have done some engagement with local groups like the Shoshone-Bannock tribes for site work.
And Altman leaving.
Altman resigning to avoid conflicts is usually seen as a good governance move. Proactive. DeWitt stepping up to chair maintains leadership. Having big institutional investors also implies some level of governance scrutiny.
Okay, let's try to sum up management. Honest, capable, shareholder-focused.
Capability. Well, it's a mixed picture. Strong technical base, key strategic hires, they've hit development milestones. But that CLA denial is a major question mark on their ability to execute complex regulatory processes effectively, at least so far.
Honesty.
Seems okay. They report their financials, seem clear about their stage. Altman's reason for leaving was stated clearly.
Shareholder-oriented.
The SPAC deal was about getting capital and giving early investors liquidity. The build-own-operate model aims for long-term value. However, you really have to look at the insider trading activity the sources highlight.
Right, you mentioned insider sales. What did that look like?
This is definitely something to be aware of. Both co-founders, DeWitt and Cochran, sold shares multiple times in March 2025. DeWitt, for instance, sold on March 27th, 28th, and 31st. Sources estimate each founder has sold around 446,000 shares since 2021.
Is that unusual?
It's very common for founders to sell shares after going public for diversification, taxes, whatever. But given Oklo's pre-revenue stage and the stock's wild swings, it's noteworthy. Something to watch.
Any insiders buying?
Yes, there was a counter-signal. Director John M. Jansen bought 6,000 shares on March 27th, so not all selling. But overall, since 2021, the pattern is about 11,000 shares bought by insiders versus roughly 893,000 sold.
How are they actually using the money they raised from the SPAC and elsewhere?
It looks laser-focused on R&D and getting that first plant licensed and ready to build. R&D spending jumped significantly in Q1 2025 to $7.8 million.
And their overall spending forecast?
They're projecting using $65 million to $80 million in cash for the full fiscal year 2025. That's more than double their operating loss in 2024. It clearly shows they're ramping up investment to push towards getting that first reactor going.
And they used some capital for that atomic alchemy acquisition, too.
Right, that was a strategic buy to add that potential radioisotope business line. But the SPAC merger itself was the big capital injection, $306 million gross, which was vital fuel for their development engine.
No chance of dividends or buybacks, then?
Oh, absolutely none. They're burning cash, not generating extra. That won't happen for a very, very long time, if ever. Metrics like return on invested capital, meaningless at this point.
So is their capital allocation effective right now?
It's really tough to judge definitively this early. Signs of effectiveness, hitting milestones like the DOE site permit, making those key hires like the ex-NRC person, advancing the revised NRC strategy, building that LOI pipeline. Those are all necessary steps.
But the spending rate is a concern.
It's something to watch closely. That cash burn, $12.2 million used in operations in Q1, projected $65–80 million for the year, puts pressure on them. They have a good chunk of cash, $260.7 million in of Q1, giving them runway for maybe a few years at that rate. But it's a race against time to hit key milestones before they need to raise more money, which could dilute existing shareholders.
Okay, let's put some hard numbers on the table. Financial snapshot, end of May 2025, using those Q1 results, key metrics.
All right, the numbers. Market cap around $6.8 billion as of May 23rd, but remember that crazy volatility in May. Price to earnings ratio, totally meaningless. It's negative, deeply negative, like -9 or -140, depending how you slice it. They don't have earnings.
Core business revenue.
Still zero. That $1.5 million in Q1 was just grants or milestones. Again, that first real power revenue is targeted somewhere between late 2026 and maybe late 2028, based on the varying projections.
Profitability.
Consistently negative, losses are expected. Q1 2025 operating loss was $17.9 million. Net loss was $10.29 million, about 7 cents per share. That actually beat analyst forecasts slightly. They expected an 8-cent loss.
What about debt?
This is a definite plus for them at this stage. Very, very little debt, almost zero, around $0 to $2 million total debt against roughly $269 million in equity at the end of March. So very low leverage on the balance sheet.
Cash flow generation.
Nope, they're burning cash.
Yeah.
And the burn rate is increasing. $12.2 million used in operations just in Q1 2025. For all of 2024, it was $38.4 million. And remember that forecast for 2025, $65 to $80 million cash usage. Spending is ramping up.
Price to book value.
Very high. Something like 25 times book value per share. That's classic speculative growth territory. The market is valuing the future potential way, way above the current assets on the books.
So summing up the financial profile, how would you label Oklo?
Clearly, it's a speculative growth investment.
Yeah.
You just cannot use traditional value metrics like PE.
Yeah.
The valuation is all about the story, the technology's potential, and market sentiment, especially that powerful link to AI's energy needs.
The earnings consistency.
Consistently negative. Losses are the norm, and they're expected to get bigger in the near term as spending increases to hit that $65, $80 million cash burn projection for 2025.
Dividend policy.
None. Not for a very long time, if ever. All capital is going back into development.
Debt management.
Seems prudent so far. Keeping debt minimal gives them flexibility. They have a strong balance sheet for a company at this stage. But looking ahead, building reactors is hugely capital intensive. Future construction will require significant financing, likely including substantial debt.
Working capital. Liquidity.
Their current ratio is very high, like 36.2 in Q1. That means lots of cash relative to short-term bills, strong short-term liquidity. Efficiency isn't the right word here. The focus is just managing that cash burn, $12.02 in Q1, against their reserves, $260.07 end of Q1. That rising spending forecast for 2025 is the key thing to track here.
So the bottom line on financials, are they profitable? Do they have a strong balance sheet?
Definitely not profitable. Yes, they have a strong balance sheet for their current stage, meaning plenty of cash, almost no debt, giving them runway. But that strength comes from raised capital, not operations. It's really interesting that the stock actually dipped after the Q1 results, even though they beat the loss estimate slightly.
What does that tell you?
It strongly suggests the market cares more about seeing tangible progress towards commercial operation like licensing updates or construction news than it does about whether losses were a penny better or worse than expected.
Okay, that covers the company, the team, the money. Now let's shift focus to how the market views Oklo, who owns it, and really dig into the risks.
We're back, continuing our deep dive into Oklo Inc., OKLO. We've looked at the business, management, and financials. Now, market dynamics and risks. How's the market feeling about Oklo right now? What's the sentiment?
The general feeling is definitely highly speculative. It's seen as a bet on the future, pure and simple. Sentiment gets a huge boost from all the excitement around SMRs, that massive AI energy demand we keep talking about, and the positive policy noises around nuclear.
And that explains the wild stock price swings we saw in May.
Exactly. The stock is incredibly volatile. It jumps or drops based on specific news, often policy news, not even company news, rather than following the broader market. You saw that huge 23% surge on May 23rd. That sensitivity to news, likely policy-related. High RSI readings also suggest momentum traders are heavily involved.
But it's not all hype. There's caution, too. Oh, yeah, absolutely. The fact that they're pre-revenue, the huge execution risks involved, getting licensed, actually building the thing, and some negative commentary like being put on that red flag list after Q4 results, all that tempers the enthusiasm. It's definitely what traders call a battleground stock.
What about Wall Street analysts? What are they saying?
Well, the analysts who actually cover it, there were 5 of them, noted, in May 2025 had a consensus buy rating. If you break it down, it was 60% strong buy, 20% buy, 20% hold. So generally positive among that group.
Okay, but what about their price targets? Do they agree on the value?
Not even close. The price targets show massive disagreement. The range in the forces goes from a low of $30 from Citigroup all the way up to $58 from B. Riley Securities.
Wow, that's a huge spread.
It really is. And it tells you just how hard it is to put a number on a company like this right now. The analysts are making vastly different assumptions about if and when Oklo will succeed. Recent updates from Wedbush and H.C. Wainwright were around $55, pushing the average or consensus target somewhere in the $47-48 range.
We mentioned news sensitivity. Just how impactful is news?
Extremely. Positive political news, like those executive orders supporting faster reviews, stock jumps. Negative news hits hard. That Q1 earnings report is a perfect example. They lost slightly less money than expected, but the stock dropped afterwards.
Why?
Because the market wasn't just listening for the loss number. It wanted signs of real commercial progress, licensing updates, construction timelines. Didn't get them, so the stock reacted negatively. Sam Altman leaving also caused a dip, showing his name carried weight. On the flip side, news about re-engaging with the NRC was seen as positive.
What about trading patterns, short sellers, options?
This really highlights the battleground nature. Short interest is high. Around 14.7 million shares shorted as of late April, taking almost 2 days of average trading volume to cover. The short volume ratio, the percentage of daily trades that are short sales, was often over 50% in May. That's significant shorting pressure.
Are shares easy to borrow for shorting?
Availability fluctuates. Sometimes it gets tight. The cost to borrow shares, the borrow fee, was moderate, around 4%, but it adds up for shorters.
And options trading?
Very active, especially among big institutional trading firms like Jane Street, Citadel, Wolverine. They hold large positions in both calls. Bets the price goes up, and bets the price goes down.
So big money betting both ways.
Exactly. It confirms sophisticated players see potential for big moves in either direction and are positioning accordingly, either speculating or hedging. High potential for volatility, and maybe even a short squeeze if strong positive news hits unexpectedly.
Let's shift to who actually owns the stock. Institutions first.
Okay, institutional ownership. As of late May 2025, the data showed 345 institutions holding about 37.76 million shares. That's roughly 27% of the outstanding shares, excluding certain large block holders.
Any trends there?
Kind of mixed signals recently. The number of institutions holding Oklo went up quite a bit in the last quarter, by 27%. But the total number of shares they collectively hold actually went down by about 10%.
Interesting. What could that mean?
Could be a changing of the guard, some institutions selling while new ones come in, or maybe existing holders are just trimming their positions, rebalancing. Hard to say for sure without more detail.
Any well-known institutions holding shares?
Yeah, you see names like Mirai Asset, probably through their Global X Uranium ETF, ticker URA. Also Vanguard, VanEck, likely via their Nuclear Technologies ETF, NLR. Susquehanna, Citadel, BlackRock are in there too. The ETF presence suggests some ownership is just part of a broader bet on the nuclear sector.
I thought I saw a higher number somewhere for institutional ownership.
Yeah, MarketBeat had a figure around 85%, but that might include different filing types or timeframes. The Fintel data we focused on seem more specific about recent standard filings, giving that 27% number. Data sources can vary.
Okay, what about insiders, the management team, founders?
They definitely have significant skin in the game. Co-founder Jacob DeWitt owned about 18.2%, and Caroline Cochran held a similarly large stake as of early April. Sam Altman, even after selling some, still held around 4.8%. MarketBeat put the total insider ownership figure around 21.8%.
You flagged the insider selling earlier. Let's nail that down again.
Absolutely crucial point. As we said, both DeWitt and Cochran sold stock multiple times in March 2025. DeWitt sold on the 27th, 28th, and 31st.
How significant is that selling?
Since 2021, estimates suggest each founder sold around 446,000 shares. Again, founders selling post-IPO is normal for liquidity. But for pre-revenue volatile stock, it's something investors notice and need to consider. Remember the counter signal, though. Director John Jansen bought 6,000 shares on March 27th. But overall, insiders have sold way more than they've bought since 2021, about 893K sold versus 11K bought.
So ownership is still pretty concentrated with founders and early folks, even with Altman reducing his stake.
Yeah, it seems that concentration is still a feature. Altman stepping back below 5% and leaving the board is a notable shift, though. Reduces that concentration slightly, and maybe the perception of his influence.
And corporate governance?
The board has the founders plus external directors. Altman leaving to avoid conflicts looks like good governance hygiene. Big institutions being involved also usually means there's some pressure for standard governance practices.
All right, let's pull all these threads together. Potential versus challenges. Can we frame this using a SWOT analysis? Strengths, weaknesses, opportunities, threats.
Let's see. Yeah, SWOT is a good way to structure it. Let's boil it down. Strengths. First, the technology itself, that liquid metal fast reactor design, the unique fuel recycling angle based on proven concepts like ABR2. Second, their financial position for this stage, over $260 million in cash, minimal debt gives them runway. Third, experienced leadership with deep technical roots, plus they've learned, perhaps the hard way, about navigating the regulatory system. Fourth, a huge potential market, turbocharged by that AI energy demand. And finally, supportive policy trends right now.
Okay, weaknesses.
Weaknesses, top of the list. They're pre-revenue and burning cash fast. That $65–80 million projection for this year is significant. Huge execution risk. Actually building the first-of-a-kind plan is incredibly complex. Critically, that past regulatory failure, the CCOLA denial, looms large. They have to prove they can overcome that. The economics at scale are still unproven, estimates exist, but nuclear projects historically often go over budget. The stock is super volatile, and obviously no profit margins currently.
Opportunities. Where's the upside?
Opportunities. That massive AI energy demand is probably the biggest single driver right now. Broader decarbonization goals and energy security needs create a long-term tailwind. Potential for government funding and support through acts like ADVANCE, those secondary markets fuel recycling services, radioisotope production via atomic alchemy, niche applications like remote communities or military bases, and eventually maybe international markets.
And threats. What could derail this?
Threats. Number one is probably regulatory delays or unexpected changes. Policy is supportive now, but things can shift, and that past denial shows how tough the process is regardless. Intense competition not just from other SMR companies like NuScale or TerraPower, but also from rapidly improving alternative clean energy like solar, wind, and storage. Financing risk, they'll need a lot more money to build multiple plants. Supply chain bottlenecks, especially for specialized components or that HALEU fuel. Public opposition can flare up. Cost overruns are a historical plague for nuclear projects. And, as we discussed, hypothetical U.S. tariffs could add complexity.
Right. Remind us how those hypothetical tariffs could specifically impact Oklo based on the analysis.
Okay, if the U.S. were to impose new tariffs, say in 2025, the general industry analysis suggests it could hit Oklo in several ways. It could raise construction costs by making imported components, think reactor vessels, pumps, special materials, more expensive. That could disrupt their supply chain planning. Higher costs could increase their final electricity price, LCOE, making their PPAs less competitive against alternatives. It squeezes potential margins.
Any potential upside to tariffs?
Well, theoretically, it might push for more domestic manufacturing over the long run, but that would likely cause short-term delays and bottlenecks first. It could also complicate sourcing components or selling internationally, but interestingly, it could actually boost the strategic value of Oklo's domestic fuel recycling plan. If foreign fuel sources become subject to tariffs, being able to recycle domestically becomes even more attractive.
How would they try to manage that risk?
They'd likely focus on sourcing domestically where possible, maybe adjust designs, really emphasize the fuel recycling benefit in their value proposition, and engage in policy discussions to argue their case.
So it really sounds like Oklo's tech strengths, especially recycling, are key differentiators, but everything hinges on execution, getting regulatory approval, and controlling costs.
That's the absolute core tension. The AI demand adds this huge new pull factor. But Oklo has to prove they can deliver reliable, cost-competitive power, not just against other nuclear options, but against all clean energy options, many of which are getting cheaper.
Okay, this has been quite the exploration into Oklo. Let's try to wrap this up. Bringing it all together, what's the main takeaway here?
Oklo is just a fascinating case study. It's high risk, absolutely, but also high potential. Sitting right at that crossroads of advanced nuclear, the clean energy push, and this booming AI market.
Seems incredibly difficult to value using traditional methods, right?
Yeah.
Especially for someone looking for, like, tangible value now.
Impossible with traditional metrics. Pre-revenue, losing money, multi-billion-dollar market cap. It doesn't compute on a PE basis. Investing here is purely a bet on future execution. It's about believing they can turn that tech vision into a profitable reality and capture a big slice of that future energy market. So, recapping the balance. Strengths are the unique tech, fast reactor recycling, the solid cash position for now, the experienced technical team, and that huge market opportunity fueled by AI. But weighing against that are immense execution risks overcoming the past regulatory failure, building the first plant affordably and on time, the long road to profitability, fierce competition, and the ever-present uncertainties around regulation and policy.
So for you, the listener, if you're tracking Oklo, what are the absolute must-watch items, the key signals?
Success boils down to making the potential real. So you have to watch specific milestones like a hawk. How is their revised KLA progressing with the NRC? Any updates? What are the timelines and projected costs for building that first Aurora plant looking like? Are they controlling that cash burn as spending ramps up? And crucially, are they converting those LOIs into firm, signed PPAs that promise future revenue? Those are the tangible signs of progress or lack thereof.
Okay, fascinating stuff. We started this talking about the tension urgent energy needs versus the long timeline for advanced nuclear. So what does it all mean? Here's where it gets, I think, really interesting.
Yeah.
Oklo is developing technology the world arguably needs, right? For climate, for computing power. But they face these massive historical challenges, regulation, costs, complexity, all playing out over years, maybe decades. So the big question is, Can the sheer urgency of future demand, especially from AI, actually pull this complex technology into reality fast enough? Can that demand overcome the inertia, the historical hurdles of nuclear development, and the competition?
That's a powerful question to leave people with. Which force wins out? The pull of demand or the friction of development? What single factor do you think will ultimately determine Oklo's fate? Success or failure?
Definitely food for thought. If you found this deep dive helpful, please do hit that like button and subscribe to the Stock Analytics AI YouTube channel. And remember, membership is just Euro 4.99 a month to request your own prioritized deep dives on stocks you want us to analyze.
And now, the important legal stuff.
Right. This report is for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The information contained herein is based on research materials and data available as of the end of May 2025 and has not been independently verified. No representation or warranty, express or implied, is made as to the accuracy or completeness of this information.
Investing in securities, particularly in development stage companies like Oklo Inc., involves substantial risks, including the risk of loss of principal. Past performance is not indicative of future results.
The content of this report is, in part, AI-generated based on the provided research materials and analytical framework. Human oversight has been applied in its creation and review. Readers should conduct their own comprehensive research and due diligence and consult with qualified professional advisors before making any investment decisions.
The authors and publisher of this report accept no liability whatsoever for any direct or consequential loss arising from any use of this information. The discussion of hypothetical U.S. tariffs is for illustrative analytical purposes only and does not represent a forecast or prediction of future governmental actions.
Thanks for joining us for this deep dive into Oklo. We'll see you next time.